Today I was joined by Marc Faber. Marc is a world-respected investor and the editor and publisher of the Gloom Boom Doom report. The beginning of our interview started off a little bit patchy because we had some technical issues. He was really struggling to hear me, so you will see me throughout the interview speaking very forcefully into this microphone. And that's not me going mad, he couldn't hear me. So I hope you enjoy the interview and hope that you're able to hear. Thank you. I wanted to ask you about gold. I know that the price of gold, the value, has shot up quite significantly recently, and I'm wondering, why do you think that is?
Well, basically, we had a huge bull market in gold between 1999 and 2011, and since then we've had a correction. And recently, obviously, with the decline in interest rates and also with the setting of interest rates below zero in many different countries, gold becomes relatively attractive. And I believe that investors, or sophisticated investors, begin to realize that central banks around the world, after having completely failed to revitalize the global economy post-2008 crisis, will double down on their failures. In other words, they'll print even more money. And obviously, if you keep on printing money, then there are symptoms of inflation. In the last few years, we had colossal asset inflation in equities, bonds, collectibles, art, and so forth. And if they keep on printing money, then obviously gold as a store of value becomes relatively attractive.
Do you think the gold value might be being manipulated?
Well, there are some indications that the price of gold has been manipulated, but I haven't studied the matter thoroughly enough to give you an opinion whether that is the case or not. What I know is that central banks are manipulating everything. The price of money, which are interest rates. They intervene into the equity markets occasionally. They intervene into the bond market. And so it would not surprise me that the price of gold and of silver were manipulated as well.
Okay, and I know that you've been recommending gold as being a sound investment to your clients. Are you still recommending it?
Well, I have advocated for years now to my clients that to make any forecast is difficult to start with, even if the market is a perfect market. And a perfect market is a market where market participants have no influence on the price of the market. In other words, no single market participant can influence the price. But this is no longer the case. We have government interventions with fiscal measures. We have government interventions with monetary measures. And so the market is no longer perfect. It is, to start with, basically a manipulated market. And to make any forecast in a manipulated market is very difficult. And hence, I have recommended to my clients to have a diversified portfolio of, say, 25% real estate, 25% equities, 25% precious metals, and 25% bonds and cash. So yes, gold is an important part of this entire asset allocation.
Okay, and what do you think, what are the advantages of a gold investor here in Thailand as compared to a gold investor perhaps in the United States or in the UK?
Well, I think the fundamental advantage is that in the US, gold may be taken away by the Federal Reserve or the government or the Treasury, as happened in 1933. I don't believe that in Asian countries the governments will do that. It's less likely, but it could happen. But say for me, I would prefer to hold gold in Thailand than to stay in a safe deposit box in the US or in a US bank. Or I prefer to hold gold in Thailand than in Switzerland. As strange as this may sound, that is a fact.
Okay, and excuse my ignorance on the subject, but back in the, did you say the 1930s? Why was
1933?
Why was gold confiscated in the US?
Well, they took the gold away from individuals, and the sheriffs went to with the client to safe deposit boxes and opened these safe deposit boxes, and the gold had to be handed over to the government. And the government did not take it away entirely. They paid $25 an ounce. But after the government had collected all the gold, they revalued the gold price to $35 an ounce. So you understand, the client, he had to tender his gold at $25, and then the government revalued it to $35. So the client basically missed out on this appreciation. In today's world, say today, the gold price is close to $1,200 an ounce. The Western governments could in theory take gold away from private holders and pay them $1,200, and once they collect all the gold, they could revalue gold to say $12,000 an ounce.
I see. Okay. I'd quite like to ask you about the economy more generally. So from what I've read, there seems to be a certain amount of disagreement among experts about what's coming next. Do you think we have a period of hyperinflation coming soon?
Well, it's difficult to tell at the present time. I would say that people misunderstand the concept of inflation. Basically, we talk about monetary inflation. In other words, say central banks, they had 10 years ago a balance sheet of around $2 trillion. Today it's over $20 trillion. So they liquefied the system. And this increase in the balance sheet of central banks, which we could also call money printing, went mostly into boosting financial assets such as stocks, bonds, and the economy of the super rich. In other words, Mayfair, South Kensington, Belgravia, and Knightsbridge properties in England, and Newport Beach, San Francisco, Hamptons, Fifth Avenue, Madison Avenue, and so was the economy of the rich, but a huge boom. And bond prices rallied. In other words, interest rates fell from around 6% to 0 or less than 0 at the present time. So that is a symptom of inflation. What we didn't get is a lot of consumer price inflation. In other words, the price of a mobile phone, of a computer, notebook, and so forth. But we had service inflation. The insurance premiums in the US have gone up strongly. Taxes are up, and so forth and so on. Healthcare costs are up. If you send your children to private by how much they charge. So you understand, all kinds of things have gone up. Now, will we go into hyperinflation? Who knows? And it doesn't really matter for now. For now, I don't think we'll go into hyperinflation. We may have first a period of deflation, or even more money printing and even lower interest rates, and later on hyperinflation. But right now, the threat of hyperinflation is not very high. But eventually, it's quite possible that it will happen.
Okay. I'd like to turn to a second to the Chinese crash. I mean, how do you think it's affected the Thai economy, if at all?
Well, the Thai economy does not depend on the stock market in China, but obviously the whole of Asia has become China-centric. In other words, South Korea, Taiwan, Hong Kong, Singapore, and also Thailand and the other countries in Asia, they depend much more on exports to China than, say, exports to the United States. And the Chinese economy began to decelerate 3 years ago, and started to decelerate more meaningfully 18 months ago, which then brought down the price of commodities, from which Thailand is to some extent also affected, because Thailand is a large producer of rubber and rice and so forth. So all these commodities came down. So yes, no doubt that the Chinese economy has affected Thailand, but I'd like to point out the Chinese economy has decelerated, but at the same time, some sectors of the economy are still growing. So we have today China being the largest tourist group in Thailand. They are almost 30% of all tourists in Thailand are from China. And surprisingly, on a per capita basis, the Chinese spend more than anybody else in Thailand. They don't live necessarily in luxury hotels, but they are big shoppers in Thailand. Presumably because a lot of goods here are cheaper than in China. So the tourist sector in Thailand is essentially booming to a large extent because of Chinese visitors.
Okay. Now, to a more Thailand-focused question, what do you think the main challenges are at the moment for the Thai economy?
Well, the Thai economy is not a dynamic economy per se, except at night. But in general, it is not an economy like South Korea was between 1960 and 1990, or China was over the last 20 years, a very dynamically growing economy. And part of the problem of Thailand's economy, and this is a structural problem, is first of all, property rights are not very well defined. That some other economies like China also have, but to a lesser extent. But at the same time, the educational system in Thailand is not only bad, it is horrible. It is horrible. And unless significant progress is undertaken to boost the educational system, not just of a select few, say 3% of the population, but to boost the educational standards of the entire population, unless that happens, the Thai economy the blessed tree from God or from the Buddha, that the population has enough to eat. But that brings another problem, that people don't really have to work very hard. They can survive on the little house they have in the countryside and so forth, and don't really need to work very hard. Compare, say, Hong Kong and Singapore. You don't work in Hong Kong, you don't work in Singapore, you have nothing to eat. You have nothing, you have no house over your house. In Thailand, you don't work, you can still live very well.
Why do you think the education system is so bad here?
I prefer not to answer this question. I don't want to get arrested.
Okay, fair enough. Okay, I'm wondering if you can offer us some advice. In the past few weeks I've read numerous things, but I read one article in particular that the Royal Bank of Scotland is recommending that people sell everything because they're predicting an upcoming crash. I mean, do you think that's prudent to sell everything?
The question is, you sell everything and then you have cash. Well, where do you keep the cash? In the bank? At RBS, for instance, that already went bankrupt once. You understand? Sell everything is philosophically maybe the right thing to do if you believe in asset deflation. In other words, you believe that real estate prices will go down, that stock prices will go down, that bond prices will go down, that gold prices will go down. That may be the right thing to do. But then you have sit on money, and where do you keep the money? Then the second question is, in what currency you keep the money? And these are questions I personally would feel now very uncomfortable to hold all my money with banks, whereby I have to say Thai banks are probably safer than say Deutsche and Credit Suisse and UBS, because the Thai banks who never dealt heavily in derivative products, you understand? They don't understand it, so they never did it. And sometimes to be stupid is better than to be highly sophisticated and pile up books of trillions of dollars in derivative products, which the senior management and the board of directors doesn't understand either. I feel very comfortable. I have an account with Siam Commercial Bank. I think that Siam Commercial Bank, for the depositors, there is no risk. The risk is that my baht goes down, but as a bank, there's no risk. I have deposits with Credit Suisse and with UBS and with European banks. I think there is a risk. That's why I say, and then, where do you put your money?
Okay, I'd like to return to gold that we were discussing at the beginning. I'm just quite curious, I mean, how do you advise people on the practicalities of owning gold and buying gold? I mean, where should one buy it and where should one store it?
Well, I buy it from Swiss banks, and I have some gold here in Asia, and I still have too much in Switzerland, but gradually I will move it to Asia.
Is that difficult to transport it?
Not really, no.
No? Okay. And just to wrap up, do you have any general advice for people in regard to Southeast Asia and Thailand in particular, in terms of their investments?
Well, basically, as I said at the beginning, we don't know how the world will look like in 5 years' time or 10 years' time. But I'm aware that there are some people that make all kinds of forecasts, including myself. But really knowing how the world will be in 5 years or 10 years, nobody knows. And so I would diversify. Secondly, I'm a believer in the view that the Western world has huge structural problems, huge, and that Asia still has a lot of growth potential. Say, I invest in Vietnam, Cambodia, and I'm familiar with Laos and Myanmar. I think this Indo-Chinese region, starting in the east with Vietnam, north, west, Laos, southwest, Cambodia, then Thailand, and in the east, in the west, Myanmar, India, Bangladesh, the north, Yunnan province, in the south, Malaysia, Singapore. This region has a huge growth potential. And also if you look at the economy of Cambodia and Vietnam at the present time, these are boom economies, and I think economically Vietnam is likely to overtake Thailand in terms of GDP per capita over time. There's no question about this. But we need peace. But let's say if we have peace, then this region has a huge potential from which selected Thai companies can benefit. I have relatively large investments in Thailand, in equities and in properties, and I'm reasonably happy with it.
Okay.
The political situation is not ideal, but it's probably better to have the military government in Thailand than Mrs. Hillary Clinton in the US, or Bernie Sanders, you understand?
Yeah.
Or Mrs. Merkel in Germany, or François Hollande in France, and so forth. So everything is relative. And I believe that investors over time, especially given the relatively low valuation of assets in Thailand today compared to, say, the Thai stock market compared to the US market, Thai stock market is not cheap, but is reasonably priced. I think it will go lower, but it's reasonably priced. So I think over the long run, and I have a portfolio of stocks, they have dividend yields of 5% or more, so I feel reasonably comfortable.
Okay, great. Well, Mark, thank you so much for your time.
Yeah, you're welcome.
All right.